Hey, Internet, welcome back to another episode of New Foundations, a podcast brought to you by Acropolis, the Bitcoin Treasury company. I'm here again with my co host Bobby, and today we're joined by Justin Chin. Justin is an advisor for Acropolis. This is part two of our Acropolis Advisor series. So, really excited to uh, get to know Justin a bit more, learn about his background, and the wealth of experience and knowledge he brings to the table. Justin, welcome.
Thanks, guys. Happy to be here.
Happy to have you. So let's start off with, if you could, please tell the audience a bit more about yourself, and then your background in Bitcoin and how you first became interested in it.
Okay, so I guess I've worked in traditional finance, in banking, and more recently in investment management. I've started out working with small and medium-sized businesses, worked my way into institutional banking, where I got into project finance, and sort of developed a specialization with energy and infrastructure projects. So I came across, I probably took a proper look at Bitcoin in 2020 when we were all locked down. I had a lot of time on our hands, thinking about all that money being printed. And, it's to my detriment, I probably ignored it in the previous years when I first heard about it. I think intuitively you kind of know what it is, but I don't think I'd done the research to know that this is something that would actually work. And I didn't understand the history that had gone into previous attempts to make, internet money.
Was there a particular point, when you mentioned you were watching them print all the money, was it when you received a stimulus check, or was there a particular, you know, spend that made you realize that this is unsustainable and that Bitcoin could be a solution?
I think it was really Michael Saylor that sort of put it on the radar. I think at that time when he was launching the MicroStrategy Treasury play, he was doing media everywhere, and you've seen he's been prolific since. So that sort of put it on the radar, and I think the thing that sort of brought it home was I'd sort of read the human inability to understand the difference in orders of magnitude, and that is the difference between a billion and a trillion, and putting that in terms of time, a billion being 32 years in seconds. And I thought about that in terms of the GFC in 2008. They were printing billions. The magnitude of it. There were people sitting on the street. There were protests. It felt like the end of the world. And not that long after 2020, we were printing in trillions. And when the realization hit home that a trillion is 32,000 years, then that's sort of the straw that broke the camel's back. That's when you realize that it's never going to get repaid, and then we need to find another solution for everything.
Yeah, those big numbers get trippy. I mentioned him on the last episode, but I'll mention him again. Early Riders partner Brad, he tweeted something yesterday where he was talking about the national debt and how there's been $1.1 trillion added since March, I believe. And then he said, in other words, that's 122 Dallas Cowboys franchises in, 6 or 7 months, which really puts it into a different perspective. But back on topic, I would say we want to know what motivated you to join Acropolis as an advisor. Was it something about the mission or something else?
Yeah, I think it's actually a really important business in this point of the adoption cycle. So, 4 years after MicroStrategy, ETFs have just launched. I think there's a lot of interest now in the broader market, how people can adopt Bitcoin as a treasury asset as well. So, it's a great opportunity to work with businesses of all sizes to sort of help them on that journey, advise and educate them, and it's exciting to be part of that. The most important thing to sort of for people to get their heads around now is just adopting it as a treasury asset. I think down the road there's going to be other sort of technical innovations and other ways that they can incorporate the protocol into their business. But right now, like a lot of the benefit seems to be from just understanding what it is and adopting it as a treasury asset.
Yeah. And when it comes to helping people understand what it is, what personally have you found most compelling or revolutionary, or what's transformative about Bitcoin that business owners need to understand as it relates to their organizations?
I think once you start to hold it as a treasury asset for some time, and the months and years pass, and you reflect on it, I think you naturally progress down the spectrum to sort of thinking of it as a unit of account as well. So whether you use those terms or not, I think it actually guides you to thinking more constructively about the scarcity of capital. And, is an extra dollar that you're spending now going to be more productively used in the future? Is it going to deliver a better return than just holding on to Bitcoin? I think that's something that sort of gradually happens over the months and years that you continue to hold the asset and learn more about it.
I'd love to pull on Justin a little bit more of your day to day. You work in traditional finance. I believe you're in London right now, right?
Yeah, London based, yeah.
What's been the conversations like? Have they been progressing as of late with the ETFs and presidential candidates talking about it, or is it more, still of the same story? Uh, Traditional finance is not quite ready for Bitcoin. How would you answer that?
Well, the sector that I work in is really to do with investment risk for energy and infrastructure assets. So uh, very much now that's the flavor of the moment. Energy is a very big topic at the front of everyone's mind. There's a lot of renewable energy projects that are getting financing, and we'll probably need financing in the next sort of decade ahead. So where Bitcoin fits into that, I don't think it's really entered the mainstream conscious yet. I think sometimes there's discussions of using projects optionality. So with a solar project, there's talk of putting a battery on it to sort of increase the optionality there. The next natural progression would be to plug in a Bitcoin miner and use that optionality as well. But I don't think that's sort of reached the broad sort of consensus or awareness in that particular industry yet.
Yeah, let's talk about that because I think the three of us on this call understand how mining Bitcoin promotes the production of renewable energy. But I think more broadly, folks who are just listening to this, curious about Bitcoin Treasury in general, can you explain how Bitcoin is, good for the production of renewables?
Sure. I think it's basically, in a very large sense, finding a way to monetize energy that previously couldn't be monetized and brought to market. So it's a fundamentally different paradigm shift where the rather than the energy being transported to where the demand load is, and suffering a lot of transmission losses, the economics and the monetization of it can actually go to the source now. Plug-in ASICs can happen anywhere in the world, and the shape of the demand profile is also variable. So you've probably seen it more play out in ERCOT in Texas, in the US at the moment, where there's more awareness of Bitcoin's role in demand response in markets, and that's basically leveling off what they call in the industry the duck curve, which is basically trying to shave off your peak demand and level it out so that the system is overall more stable.
Yeah, anecdotally, I'm from Texas, born and raised. I live here now. And, growing up, there was always rolling blackouts when it was very hot outside. It gets quite hot in Texas, as most people know. Even though most people don't know, it also gets quite cold in Texas. And, a few years ago, before the Bitcoin mining was as popular as it is, there was a winter storm that hit Austin and in Texas in general that caused a lot of power outages. And a lot of people speculate that if it wasn't for the Bitcoin demand response program that was in place then it would have been much worse. But anecdotally, I will say that, like I said, growing up, there was rolling blackouts. And ever since Bitcoin has been such a major part of the energy grid here, I don't remember the last time there was a rolling blackout, which is, obviously Bitcoin benefits people who don't have any idea what Bitcoin is, which I think is pretty cool. But shifting gears a little bit, in your experience talking about Bitcoin, have you had any significant challenges that you've encountered as you try to help others overcome their, I guess, preconceived notions to Bitcoin?
Yeah, I think I have to sort of be sympathetic because I think I probably made every psychological error as I was sort of going down that path as well, whether it was, unit bias or not having enough knowledge and understanding of it to hold a position once you sort of get into a large position initially. So, I I think I've got friends that have Bitcoin, but they're also interested in some of these altcoin projects as well. I think that's for me what I find most challenging is then the separation of Bitcoin with crypto and altcoins as well. And it's a bit of a more nuanced conversation. I think at some stage I had altcoins as well. I think I can't remember the name of it, but I had the one that was the decentralized YouTube, and this was years before I heard about what Nostr was or what it could do. So I think it's a bit of a nuanced conversation that gets missed sometimes. I think a lot of those altcoin projects are trying to solve a use case for the potential of what the internet could have been initially, but wasn't. But I think it misses the big picture in terms of is this the right tool to use as a monetary, financial asset that the world is going to adopt.
Justin, I have a question. Like, considering you work with like investment risk at Nuveen, I'm wondering, you there's a mix of like the energy and the money component in your job, and the one thing I feel like I see often on like LinkedIn and other professional networks is people will say, "Oh, Bitcoin cannot scale. Bitcoin will never function. The innovation is blockchain." And I feel like we all on this call know that's been disproven for quite some time. And the Lightning Network Layer 2 is a great scaling solution. At Voltage, we serve companies and help them calculate and understand the savings they can get, and they can pass along to their customers as well. Are people in your network, I guess, number one, are they bringing up Bitcoin on their own, or do you have to start off the conversation? In part two, is there still a lot of confusion in the market that, blockchain is the innovation and Bitcoin is not? Or have you really seen this conversation shift to where people on their own are really realizing and understanding like Bitcoin is the innovation in this entire industry?
Yeah, I mean, to be honest, in my circles, I haven't heard too much of either brought up. It's not Bitcoin or it's not blockchain. I think, unfortunately, in a lot of traditional finance circles, like Bitcoin is still lumped in with crypto and altcoins. And what I mean by that is it's seen as something that has a speculative risk profile. I don't think there's a nuance yet that, to see it as things like digital commodity or digital property or digital gold. I think what it sort of takes is a lot of legitimacy. I think that sort of helps with the launch of the ETFs now that BlackRock is, putting out research material stating some of the investment thesis. That helps. It helps that, Larry Fink is on CNBC saying it's a legitimate legitimate financial asset. That helps as well. But typically the conversations aren't, people aren't asking about it yet. It's still very early in my pocket of the TradFi world in that regard.
Got it. Yeah, seeing I think it was Charles Schwab. They gave MicroStrategy an F underperform rating like this last week. I saw images circulating online, and I don't believe they've qualified yet to be in the S&P. It's something like 3 or 4 quarters of like sustaining or holding the growth that they've had. So it sounds like it'll be like mid next year potentially. But yeah, it's interesting seeing companies who do put forth this playbook, and not to make us MicroStrategy fanboys, but I mean just in the last month, their stock's up 57% and their market cap is about to cross 40 billion, and it's just really interesting. I think initially when they started buying Bitcoin, it was very easy for folks in like legacy financial circles just to be like, this is very speculative. And the fact that the playbook is being explained so well by Michael, and there's a lot of just these kind of niche accounts on Twitter who are like heavily documenting the process. Like, here's the rate of their debt. Here's when it matures. Here's what they are doing. Like, it's actually helped me like grow and understand like how financials are managed at companies. And I'm really hoping that, over time, like folks like you and Mason can, enlighten some of these other decision makers, because it's hard to really understand like what other asset could protect a company. And I'd just be curious, maybe we could go down this rabbit hole for 1 minute. What would you hold if you did not have Bitcoin in this world? Imagine Bitcoin is gone. Like, what would you hold, and would you feel confident holding this asset you're about to tell us about?
Yeah, I don't think I can it's hard to imagine going back once you've sort of discovered Bitcoin. It's hard to imagine the world without it. I don't know. Even if it fails, I think the values of what it's meant to be and the potential that it's meant to deliver. I think it's going to make it hard to just then go back to traditional assets. I don't think you just pile back into fixed income. That's interesting that you mentioned that about Charles Schwab. I think there's something going on there about psychological bias as well. Like when it's post the fact. Like I think MicroStrategy's had their strategy out there for 4 years now. The actual results are there for 4 years. So to look at it after 4 years and say write it off and say it's a fluke or it's a speculation or it could come undone any minute. I think it kind of misses the point. I think there's some sort of psychological bias at play there, because I think there were at times during the bear market in the last 4 years where it probably looked a bit riskier, but I think to the fact that they sized it correctly and they thought about it correctly, I think that thesis has been proved correct.
We've got to call Rich. Rich is also an Acropolis advisor. We had him on last week, and he was at Schwab for quite a while. So we'll have to figure out what's going on with Schwab with Rich. But staying on that same topic, I think the ability for small businesses to take the MicroStrategy playbook at a smaller scale and do the exact same thing, because you have the same access to the same network that Michael Saylor in MicroStrategy has. And I tweeted yesterday that 5 years ago, MicroStrategy had $500 million in cash. Today, they hold over 15 billion in Bitcoin, aka digital cash. Their stock is up 1,200% with no signs of slowing down. And I think 5 years from today, a Bitcoin treasury strategy will be the norm, and Saylor is leading the way. And at Acropolis, maybe you don't have to go and use the capital markets, issuing debt and equity to acquire as much Bitcoin as you can. But if it's right for your business in a more simple way, just slowly buying and accumulating Bitcoin, like I said, on a much smaller scale, is going to prove really accretive for companies around the world, and I think potentially save companies that would have gone under, given the inflation and everything that it takes to run a business. Your labor, your insurance, your cost of goods sold, everything is going up. And I think that's why I'm just really excited to be running this business at Acropolis, trying to help folks out there, have a solution to the debasement. On that same note, for businesses that are starting to consider Bitcoin, what advice would you give them based on your experience, given the volatility or the accumulation strategies?
I think it's just start somewhere. I think I mentioned before that, my own mistake was that I had initially too large a holding that didn't match my understanding of the asset. And then when the volatility comes, it makes it a lot harder to hold. I think in Bitcoin, proof of work's kind of a meta concept. You need proof of work to be able to hold your stack as well, whatever size that is as well. So for businesses initially considering it, there's no wrong allocation. I think you just have to start somewhere. And that gives you that opens the door to allow you to learn more about the asset. And as you do, that helps you with your conviction, your ability to hold it through the volatility. And as the time progresses as well, you'll also be able to understand better how to size your holding relative to all the other things that are happening in your business as well, because every business will have cash flow requirements as well. They'll need a margin of safety. Some will have a larger working capital requirement than others. That means that they'll need to have more cash on hand. So I think that's going to be the really interesting thing, and the exciting thing about Acropolis is that there's a whole range of businesses. They're all going to have different requirements. Finance is a very much a relationships-based business. So delving into those relationships to sort of find out each business's story, and then working with the customer's best interest in mind to sort of size what's the appropriate rate that they can accumulate Bitcoin with a margin of safety, and at the same time building their understanding of the asset. I think that sounds like a really exciting and fulfilling process ahead.
Justin, one question. For new entrants who are coming into Bitcoin, you mentioned a couple of things already, like not overexposing oneself and having a reasonable position for where you are in your Bitcoin journey. But Is there any other advice you would share that might accelerate their learning or understanding beyond maybe going back and looking at some of Sailor's talking points? Is there anything else that's been valuable in your journey that you might want to share with those who are listening?
I think what helped make it more real was actually reaching out and talking to other people. Initially when I was learning about it, like many people, I was probably there on Bitcoin Twitter, sort of lurking and learning as well. And it wasn't until I sort of reached out to someone and, sent them a DM and asked them a few questions about it that sort of gave you permission to, realize that it is a real space. There are people that have come to similar conclusions themselves, all over the world, as well. I think, what helped for me was realizing the depth and the breadth of this concept. What Bitcoin is actually is not just a financial asset. One of the Bitcoiners that, I initially really got into was Gigi. He's very much a philosophical kind of writer about Bitcoin, the different aspects of it, about energy, about time. And, he's a pseudonymous person who is a man in a green suit, essentially. But the quality of his sort of ideas, had such depth of thought to them that it sort of actually made it seem more real, ironically, that even though that he was a pseudonymous person, the fact that you could just take on those ideas sort of helped get me to the next level of conviction as well.
Yeah, for those listening who are not familiar with Gigi, he wrote the book 21 Questions. It's really good. I got that and read it a couple of years ago as well. And there was one book he wrote, an article that I thought was particularly good called Bitcoin is Time. I think that was one you just referenced as well. So whether you want to read an online article, check out Bitcoin is Time, or his book 21 Questions. I thought it did a really good job, and I agree with you because he is an engineer by trade, and he takes the complexities of Bitcoin and how it functions and kind of breaks it down in a more, I don't know how to describe it, but just like a simplified way to understand. So for someone listening, I've done marketing and sales my entire life. I'm not a technical guy, but he took these very complex engineer focused topics and made it really easy for my mind to understand, and it really helped me as well. So I'm glad you found some value from him as well.
Yeah, I think the other thing that sort of helped as well was it helped realizing that you were part of something bigger and something that's happening in other parts of the world as well.
Yeah.
For me, I think El Salvador was particularly important as well, and that goes all the way back to being on a Twitter Spaces. And I'm not even sure if I can remember this correctly. I think like Nick Carter was cooking dinner, and then Bukele joined the Twitter Spaces chat, and they were talking about the Bitcoin law, and like this was like kind of wild that this was all happening on a Twitter live Spaces. So that sort of encouraged me to buy a plane ticket and go to El Salvador and the Adopting Bitcoin conference there. And I think what I found there was that I met a whole bunch of founders from different parts of the world. And Bobby, I know you've posted about Machankura, the protocol that's in Africa built on the Lightning Network that basically allows people to access Bitcoin through feature phones, not necessarily smartphones. So I met KG, the guy who built that in El Salvador as well, and that kind of makes it gives you the next level of conviction as well, because you realize there's people all over the world building on this open network and this open protocol, and every day this happens and you don't even necessarily know about it as well. That's something that's really powerful as well.
Yeah, that is a good point. It's very easy to think of an asset through kind of a one-dimensional lens, or through the sense of like, does it have cash flows? Because it's just, I feel like that's maybe how finance has always been trained. And here we have this, steam engine known as Bitcoin that not only is a capital asset, but it can be built upon and it can be made accessible in hundreds of different ways that most wouldn't understand. Like, you can send it over these simple brick phones, like, you can also send it over satellite. You can send money over radio. Like, there's all of this stuff that you'd never fathom. And then we've got the Lightning Network. There's the fact that AIs can be given autonomous wallets and make decisions and work together. You can put paywalls on APIs, and it's really hard to take into consideration. This isn't just something humans are holding. And granted, that's what we're talking about here. But the fact that all this cutting edge technology, where most of the venture money in the world really feels like it's going, like OpenAI's valuation, what was it, 160 billion? They just pivoted to like for profit, and there's a very compelling case that Bitcoin is the money for AI. And it's really hard to wrap our mind around that. When you bring that topic up, it very easily causes deer in headlights for people, because it's like, whoa, what are you talking about? So we kind of have to keep it, Bitcoin's money, it's a treasury asset. But when you add all these additional layers, and once you are down the rabbit hole, your eyes are open tremendously, because money's completely changed forever. I'll kind of pause there, but it's always kind of surprising me, and I've worked or been around the industry for 7 years now.
Yeah, I think, Bobby, that goes back to what I said earlier, in that you can see Bitcoin as complicated as you'd like or as simple as you'd like, and you can get the same benefit that the country of El Salvador gets. El Salvador, if you're not familiar, stacks Bitcoin daily, and their balance sheet is much larger than the average human's balance sheet or the average SMB's balance sheet. But in the end, it's still a balance sheet, and it's still the same asset that you get to benefit from. And we talk a lot on this show about how if it's good for your personal balance sheet, it's likely good for your business balance sheet. And that brings up a question of, Bitcoiners talk about how Bitcoin bleeds into the rest of your life and makes load time preference decisions go into the way that you treat your health and the way that you just your general outlook on life. I think this also applies to businesses. So if you could maybe shed some light on what Bitcoin could do for your business in the way that it could instill load time preference decision making with your employees.
Yeah, I think the low time preference theme is one that, can be applied to a wide range of things in terms of, how you treat and remunerate your employees, also to the quality of the goods and services you produce. I think it's not too much of a stretch to see how fiat money has corrupted the quality of goods and services that get produced, because people are trying to cut corners, people are trying to reduce their costs. It's a very zero-sum mentality. But I think if you sit with, Bitcoin for longer, and the more you integrate it into your treasury, then the more that your time preference changes, you can actually focus on producing more quality goods, because you don't have that same scarcity mindset. You actually have a more optimistic mindset when you project into the future. So why would you make an inferior quality product or deliver an inferior quality service when you could just do it properly the first time, knowing that you have some financial security on the other side, or that you don't think that there's going to be scarcity on the other side waiting for you?
Well, Bobby, unless you have any other questions, I think, we like to keep these episodes short, something you could listen to on a lunch break. And I wanted to give our listeners an opportunity to get to know Justin a bit more. So, Justin, where can the people follow you and learn more about you if they're interested?
I think the best place is probably on LinkedIn. I'm Justin Chin on LinkedIn. Send me a DM there, and I'd be happy to get back to you.
Awesome. All right. Well, thanks for joining us, Justin, and hope you have a great rest of your week.
Thanks for having me, guys.
Thanks.
Thanks for listening to this week's episode of the show. Quick reminder that New Foundations is for informational and entertainment purposes only, and nothing should be construed as investment, financial, or legal advice. Business owners, business operators, and those who are Bitcoin curious, let's connect. Visit acropolistreasury.com to learn more or to get in touch with our team.